Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there as always. In today's video, we're going to talk about 3 stocks that I've made some mistakes in, and I think you can learn a lot from mistakes, right? I mean, in the stock market, you're going to be able to learn a lot from your successes, right? But mistakes, and when you think of mistakes, don't just think like you have to lose money, right? Because there's a lot of different mistakes. One can be you literally lost money on a stock, right? Another one could be you didn't buy heavy enough when you should have bought a stock heavy enough, right? The third kind of mistake you can make is maybe you put money in a certain stock when really your money should have been better suited in another stock, right? And so those are just some mistakes you can make in the stock market. So I want to kind of share some of these with you guys here today. I hope you appreciate me getting into this and some of the mistakes I've made this year in regards to stocks. I appreciate you guys being here, and I hope you appreciate me sharing this with you. And I think there's going to be a lot to learn from a video like today. All I ask in return is that you smash that like button. That's literally it, guys. I appreciate you being here. If you want to join us in Stock Hub, that's our free Discord chat. That will be linked in the description. Absolutely free to join in there if you're interested in that, okay? Alrighty, guys, let's get into this. So the first one of these 3 stocks I've made a mistake on this year is Palantir. So you might look at it and say, well, this is going great, man. It's a stock you bought this year. You're up 46% on it, up $1,300. Yeah, that's all great. But the fact is around this one, I did not buy nearly heavy enough, right? Even remotely close to as heavy as I should have bought. I should have bought this stock far heavier than I did, but I didn't. And I bought 150 shares, which at that time was $2,900, right? And so I look at this, and this was a stock I really, really liked, under $20 a share. And I even watched it go down to 18, and I bought it there at 1969. I never bought more shares, and it's just kind of disappointing because it's such a small position that, and here's the thing about something like this. A stock like Palantir is perfect for my portfolio. You know why? Because I don't own anything like this. So it's not just that I believed in the company and kind of what they're doing and how sticky I think that business model is going to be long term, but it's the perfect stock for my portfolio, right? Because I don't own anything like that. I mean, you know, that's a company that's really at the cross section of data and artificial intelligence, and a huge company in the B2B space that's going to get, you know, in my opinion, exponentially larger over the coming years. And so I just didn't start the position big enough. And now it's gone up 46+% since I bought in, which makes it very hard for me to buy more shares. Not impossible. I've averaged up on stocks many times in the past, right? But, you know, to average up on a 46+% gainer just since I bought this year, that's a tough one, right? And where it comes into become a little more tough around Palantir for me is the fact that when we look at the valuation of this company, right? So keep in mind, this market cap's actually not correct. It's actually over $55 billion as of today. It takes like a day to reflect on Yahoo Finance. They're kind of a little laggy, okay? So the real price to sales ratio on Palantir as of today is over 40. Now, you know, if you don't know price to sales ratio, it's essentially looking at the revenue versus where the market cap's at. And when you're talking a 40, that's like insanely high. Like usually you should expect around a 1 price to sales ratio in most stocks, or 1.5, somewhere around there. For something like Palantir, you expect to pay up and pay a premium because 2 reasons. One, they're more of a software business. Software type businesses, right? And this one's kind of at the cross section of data and artificial intelligence. What you're going to have to pay for a premium on those sorts of business models is exponentially higher than something like a retailer or something like that, right? Where you might be able to get a retailer at a 0.5 price to sales ratio, a 0.7 or a 1 or something like that, right? So they're always going to trade at premiums. You're likely going to see a lot of you know, software related companies trade at price to sales ratios between 5 and 20. Between 5 and 20, right? Now, when you talk about 40, that's a whole different level of a price to sales ratio. You're talking that's insanely high. Like basically what that means is the stock is pricing in massive growth. So that company has to have massive growth just to fulfill the current valuation, right? And so that's where you kind of get into some trouble. And then you look at the forward P, it's at 131. So, but this is really the big number because, you know, Palantir is just really starting to kind of get to profitability. So I think the forward P is not as important to look at in a stock like this. It's really around price to sales ratio, and that's just, whoa, that's way up there. And so that's where I get into a situation here and I say, you know, when the stock was a lot cheaper, I should have bought heavier. I didn't have to make it into some huge position. I didn't have to make this into $1 million position or something. But to go ahead and buy $50,000 or $100,000 worth of stock when I really liked it under 20 and it was at 18, 19 a share, I should have made that move, right? Instead, I kind of sat on my hands a little bit with this one and was kind of like, oh, I hope it goes a little lower. It obviously didn't happen. It obviously obviously has just pretty much skyrocketed since then, and now we're up over 46% on the position. And now I'm in a position where it's not nearly as attractive to me as a buying perspective. And now I'm in this situation with Palantir stock where I'm looking at it, and it's just not nearly as interesting to me as a buying potential out there. Not to say they can't still be money made here, because definitely there's a lot of folks that feel like this could be a multi-$100 billion company down the road, but it's not nearly as interesting because of how high the valuations got, right? At $55 billion, this company's going to have to do $1 billion plus of net income, not revenue, net income, just to begin to start to justify that valuation, right? So let's say the stock doesn't move for the next 3 years. Let's say the stock stays exactly here, the market cap stays exactly here, 55 billion, right? If this company gets to a level where they're doing $1 billion of net income, then you could slap a 55, PE on this, and it looks like, not too crazy for a company that hopefully will still have a lot of growth, right? If they can't do that, that's where you get into some valuation concerns, and it's like, well, maybe the valuation's gotten a little pushed. So I like Palantir. I like the business model a lot. I think it's going to be an extremely sticky business model, and I think it's going to be a lot stickier business model than a lot of folks realize. I like how they're kind of at the cross-section of data and artificial intelligence. By the way, when I say sticky business model, just to be clear about this, what that means is essentially if a company uses Palantir, I think it's going to be really difficult for those companies to leave Palantir. And based upon the kind of the research I've done in the stock, and so that's what honestly makes the stock really, really intriguing, right? It's just when I look at it and it's a 40+ price to sales ratio now, I can't buy it. I can tell you and I'm not counting on this happening, it might never go down again. It might just keep going up, but in any major way. But if it ever dipped below 20 again, down that 18, 19 range, I won't make the same mistake twice. Believe me, I will buy the stock a lot heavier. But yeah. Palantir, just one, I did not buy heavy enough. And you're going to make these mistakes sometimes in the market when, you're kind of maybe get a little greedy around pricing, or you're like, I hope it goes down a little bit. And 46%, that's if I'd put $100,000 in the stock, right, which is not a crazy amount at all. If I just put $100K in it, I'm already up $46,000. And that's just in a matter of months, right? I think I bought this stock back in the springtime. So yeah, $46,000 in a few months, not too shabby, okay? So yeah, that's the first one of these 3 stocks that I just, have made a mistake on this year, where I did not buy it heavy enough despite really liking the business model a lot and believing in it long term. So that's the first one up here. Let's get in the second stock of these 3 stocks that I made a mistake on. And that is Voyager Digital, all right? Voyager Digital. So this one in Coinbase, I kind of combined them. So Coinbase, I bought some shares in the IPO. That was a really dumb decision, essentially. I never buy IPO stocks. I usually stay away from that. I got caught up in the FOMO and around Voyager as well. Now, let me be very, very clear. I love Voyager for the long term. I'm a believer in Voyager for the long term and all those sorts of things. So I want to make that really clear. I do not regret buying the stock Voyager. What I regret around this one is the fact that I got in this one way too soon, and now I'm down about 30% on this stock, right? Pretty dang close to 30%. What happened with Voyager is I definitely got caught up into the FOMO, and you can see some of these shares I bought here, when it was up 18, 22. I got caught up into the FOMO when it comes to Voyager. And essentially what happened was I was looking at, this stock in the spring, and it was really exciting, right? Obviously the revenue growth crazy. The revenue growth still is crazy. The excitement, the new customers coming in. But ultimately, I bought it at a time when, Bitcoin and the cryptos were going crazy. Like, look at where Bitcoin peaked at. Bitcoin peaked at somewhere around March, April, and that's when I was buying the stock super heavy. And look at some of these shares. Look at this one. This is my worst batch here. Down 45.5% on this one. You got to be flipping my flapjacks. Like, man, has that gone bad? And so with Voyager here, I'm in a situation where I definitely want to, get my cost basis down. And so I'm going to likely continue to buy these shares as the stock's in this $12 range or wherever it goes, whether it's 10 or 13 or 14, and get my cost basis down, because right now it's $17.62 there, right? $17.62. I got to get that down to like $15, maybe under $15, because I do like the company long term, like I said. I added it too aggressively, too dang fast. And I even was averaging up on shares, because if you look where I started buying at 16, and then look at, next thing you know, I'm adding too dang aggressively, and at some really bad prices to get caught up into the crypto FOMO that was happening at that time. Because there was a lot of it, and then there was starting to be the excitement around Coinbase going IPO, and so much excitement there, and these crypto brokerages making money hand over fist right now. And I just got in at a lot of bad pricing on this. And this can happen in the stock market. Like, sometimes your success in terms of the percentage gains you get in stocks, a lot of times it's going to depend on what price you bought at, right? For me, buying Tesla stock back in, and then we're going to get into this third stock. For me, buying Tesla stock back in, 2018, 2019, at split adjusted bases of, $40, $45, $50, whatever, right? And now that stock's at 750. I'm looking great on that. However, somebody that bought Tesla stock at 900, they're down, quite a bit on that stock, right? And they were down a lot more, a couple months ago. And so a lot of times in the stock market, you can have two people buying the same exact stock, but the timing is key. Even a matter of a few months can make a huge difference in stocks. Look at how much Palantir's gone up, right? Buying Palantir back in the springtime when it was, $18, $19 a share, you've made crazy gains on that. Buying Palantir now, hopefully you make crazy gains in the future, but what if it goes back to 18, 19? And so this is a kind of a lesson to be learned here. Pricing is key. And getting in at the right time for stocks is absolutely paramount. If you don't really time things out, as we didn't here with, obviously Voyager, meanwhile, there's some folks that obviously are in Voyager stock and have $4 cost basis on it, $5 cost basis, $7 cost basis, and those folks are looking great. They're like, I don't care if it's 12, like I'm still doubled up my money or up 80% or 70% or whatever, right? Meanwhile, somebody like myself is like, oh, I'm down almost 30% on the stock because I got way too caught up into the crypto FOMO during that period of time there, and I'm paying the price for it now. Now, like I said, what I need to do when I look at the stock, since I still love it long term just as much as I ever have, if not more than actually when I was buying back here, I need to average down the stock. I need to buy more and more shares. You can see, in July 15th, I bought, 201 shares there at $11.96. Here I bought 800 shares at $10.99, 500 shares here at $15. The stock's $12.47. I need to add another 500 to 1,000 shares. Maybe even tomorrow, like if the stock's down a bunch tomorrow, maybe I add it, right? Today I had a pretty good day. It was up 5%, but who knows? Maybe all of a sudden tomorrow it weakens, and then I'll go ahead and add shares, okay? And so, yeah, that's a lesson to be learned. Crypto can be crazy volatile, right? And, when it's going through one of those crazy up cycles, you got to be careful. And I learned that lesson right here. By the time it was, 40,000, 50,000, pushing 60,000, that was up, 2,000% from the bottoms in 2020. Bitcoin, for instance, bottomed at, what was it? I think it was 3,000 something. Bitcoin bottomed at in 2020. To make that sort of move and then get in the crypto brokerages, a little late to the game there. So I still think this is going to be a huge money maker for me long term, which is why I'm more than willing to average down on this and start building out this position bigger and bigger throughout September. It's just we get in a situation where, I add it way too aggressively, way too fast during, a crypto FOMO period. So, yeah, pay the price, and, it is what it is. Like, I'll never, ever, say I'm perfect in regards to stock market. I make money, a lot more than I lose money, right? And I get into some phenomenal stocks that, gain us 100%, 200%, 400%, 600%, 1,000+%. But every once in a while, I'm going to make a mistake. I'm going to get into stock too early, too fast. And that's a situation with Voyager here. So, yeah, anyways, that's the fundamentals on that one. Obviously the business model, it's a crypto brokerage. They want to become a stock brokerage over time. The company said that. Credit cards, debit cards, those sorts of products are coming. Maybe even more banking-related products. And I think there's a shot that they could become a giant in this space. but obviously I have to limit position sizing. Maybe I build into 200, maybe a $250,000 type position over time, and then just hold the baby and hope the management team there does a good job. A lot of the people high up on the team are came over from E-Trade, so I have pretty high confidence and conviction that they can get into the stock brokerage game as well and attract more clients that way, and maybe more folks want to just use them solely for all their purposes. So yeah, that's the second stock. Let's get into the third stock up here. That's Smile Direct Club. So Smile Direct Club's another stock here where I just did not add aggressively enough, right? $38,000 is my current value. I put $32,000 into it. We're already up 19% on this one in a very, very short amount of time. And look at the shares I bought: 505, 492, 481, 461 on this one. Those shares are up 26% so far. So this one I didn't quite add aggressively enough. This is a complete opposite scenario as Voyager. So with Voyager, crypto FOMO was going on and I was adding way too aggressively. Smile Direct Club, complete opposite situation. It was like everybody wanted to get out of this stock all at the same time, and the stock was near 52-week lows when I bought this. Like if you look at Smile Direct Club, SDC's 52-week low, it's pretty dang close to these shares I bought right here, okay? It's 4 something. I don't know if it's 450 or 460, but it's really dang close. And look at these shares. August 13th I bought these, 2021, August 16th, 2021, August 17th, 2021, August 19th, 2021. The bottom line here is with Smile Direct Club is when you see a stock that you really like for the long term, which Smile Direct Club I really like for the long term for many various reasons, including the fact that obviously masks will start going away over the next year. I mean, they've already started in a lot of states around the United States. They'll start more and more. People are going to be looking at their teeth and thinking, hey, I want to straighten them, do things like that. And a lot of folks have just put off dental work over the last 18, 20 months since Rona started, right? Now, a lot of people want to just go to the dentist in time of a pandemic, essentially, right? And so Smile Direct Club, I think, is going to be a direct beneficiary. Plus, they have a lot of things long-term that I love with this business model. And so I'm looking at a company here that, was just a beaten down dog, and I should have added it more aggressively here. The initial position was really good, right? That 29,000, but then I added 2 weekly here, right? 3,000, 1,700, 4,100. That's not aggressive enough as it was going down. It should have been 10K, 10K, 10K as it was going down there, right? Or something like 5K, 10K, 15K as it's going down. Because usually what I like to do in most stocks is I'll build out that initial position, right? And then if it goes down more, the more it goes down, the heavier I will add to that stock, right? In Smile Direct Club, I didn't stick with that plan, and look, it cost me a whole lot of gains, right? And so I look at this one and I'm like, whoo, it's I really like the stock over the coming years. I think it has huge upside potential, and I think it has actually pretty low, downside potential. I think the downside's mostly already happened in this stock. And I just didn't build fast enough, and that should be more like a $15,000 or $20,000 gain we should be sitting on right now, rather than a $6,200 gain. And so that one I didn't add quite aggressively enough. So hope you guys enjoyed a video like this where we get into some mistakes I made in 2021. Hope you guys appreciate a video like this, and let me know if there's any mistakes you've made in 2021 around any stocks. I would love to hear from you guys. As always, in that comment section, I think there's a lot you can learn from your mistakes and your successes out there, guys. So don't forget to smash that like button if you enjoyed this video here today, and check out videos on Financial Education 3. I am posting straight educational content on Financial Education 3 right now, including a ton of whiteboard videos. So if you haven't got to check out FE3 lately, check out Financial Education 3. There's all, I'm just giving gems out there like every day. So much love as always, guys, and have a great day. Peace. Don't forget to join us at Stock Hub and the Hungry Bowl. Download it, iOS, Android.